Let me introduce the next part of a conversation like this because it's also from that MPC briefing. Now, commercial banks in the country are wary of the stigma and general outlook associated with borrowing from the discount window, often seen as an indicator that the bank is in a desperate position for liquidity. They further indicate that getting access to the funds publicly is also another indicator that the bank cannot access a factor that is normally viewed negatively by investors and customers. They're now asking for the Central Bank of Kenya, CBK, to lend them money cheaply and discreetly. Wow, in capital letters. In a credit survey report by the Central Bank of Kenya, the banks had proposed to access money through its discount window, stating that the respondents, that's the banks, made proposals for the CBK to consider for further mitigation or the impact of the COVID-19. In summary, the banks have noted that there is need for CBK in conjunction with the National Treasury to come up with other specific measures that particularly cushion institutions. Currently, banks that tap the fund are required to file daily and weekly reports as well as put under targeted inspection from the regulator. Question being, could this be the reason behind data that now indicates that only a few banks have continued to rely on the regulator for the cash to stay afloat? Just before we jump to Abraham Muthogo this morning, let's jump to that comment or quote by the CBK Governor, Dr. Patrick Njoroge, on the stability of the banking industry in the country as we know of it in 2021.
We have done some scenario analysis, the what if kind of scenario, and really, if assuming that, and these are assumptions, right? Assuming that the economy remains flat, meaning the dynamism that I was talking about a moment ago does not reveal itself. Also, assuming that the benefits of the reopening do not come through, meaning you are holding the economy sort of at its worst. If that continued, let's say, for another 3 months, we've calculated that NPLs obviously would rise, and we have calculated that this would rise maybe to 16 or 17% of gross loans. Those numbers are still manageable. Why are they still manageable? Because, as a matter of fact, banks have been doing what they needed to do, meaning they needed to be conservative and make provisions for their loans. The emergency measures that we put in place have also been beneficial. We've talked about that in earlier discussions. But I think the point I would also emphasize here is that looking forward, the banks will be central, will be key in the outcomes, that the positive outcomes that we will see in 2021. From our perspective, we have made the point that pending bills are really destructive. They really ruin pricing. They also ruin the operations of the financial system. So this is one of the.
All right, Abraham and George, I want you to first react to this before then we talk about the financial stability of the banking industry in the country. He says that assuming, well, things don't get proper in the next 3 months, assuming we don't recover in quarter 4, because we're still waiting for those numbers, that NPLs will just rise to 14 to 16 or 17%. He continues to say, Bodo, because I want you to pick that first, that the worst case scenario is that banks have been doing what they are supposed to do, provision for those loans. According to him, everything is just fine. We're doing okay. Bodo, react.
No, I think that's a statement that is supposed to. It's a statement that is supposed to convey everything is all right, but in actual sense, I don't think everything is right. But first of all, let's ask ourselves,
yes,
what's a restructured loan? right? A restructured loan is a loan that is sitting in purgatory, right? It's the reason why you're structuring that loan is that the customer has not been paying for the last couple of months,
Yes.
right? Yes. And that's why you sit down with the customer, say, what's the problem? You know, can we give you more reprieve? Can we give you repayment holidays? Yes, the customer says yes, right? So if you look at, for instance, what they're saying, the figures of the Central Bank of Kenya, they're talking about 54% of loans have been affected by Q4 last year. That's very, very high, very high. And almost a third of that is households and personal loans, right? So it's talking about a recovery over the next 3 months. I think you need much more than that, right? You're talking about people who lost their jobs, people who took 30, 40% pay cut.
Yes.
Right? And you're talking about SMEs that either decided to cut down on their production or completely shut down.
Yes.
So there's no likelihood that they would come back in the next 3 months. There's no likelihood. There's no sign that someone will reopen their shop over the next 3 months. You'll
Yes.
get back your 30, 40% pay cut over the next 3 months. So that's not possible. And aside from that, if you look at the credit survey report of the Central Bank of Kenya, it has some contradictions, right? On the one side, the central bank insists that the banking sector is liquid, it's stable, right? But you have a very interesting conclusion to that report. Basically, the respondents are asking for further support, right? They're asking for credit guarantee schemes. They're asking for additional funding to be offered to them at concessional rates. They're asking for the central bank to encourage them to use the discount window without the stigma.
Yes.
By the way, there's a lot of stigma that comes with them with using the discount window,
yes.
right? I mean, if I knew my bank is living on the discount window, I would definitely know that there's a problem. And I will go and remove my money.
Yes.
Because, and even the central bank, it attracts some level of scrutiny. So what they're asking is, can those scrutinies be waived?
Yes.
Right?
Yes.
Can you not disclose our names to the public? Which, of course, the central bank doesn't usually disclose who accesses the window.
Yes.
So they're covered. But also the central bank itself usually does a lot of inspection. That inspection creates some form of noise and attention, which is what they're asking not to be done.
Yes.
But the mere fact that they're asking for increased support, or liquidity support, it shows you there's a lot of stress. There's a lot of stress in the banking sector, which they're not bringing out.
Pretty much.
And I think I would have loved to see,
yes.
I would have loved to see the central bank do what I call a stress test. Create more scenarios. Say if NPLs went to 30%, which there's a probability. In my calculation, I think there are banks whose NPL ratios are almost 50%
yes.
in my calculation.
Yes.
Right? And even, especially the tier 1 banks, some of them are 30%. And the central bank should actually do a calculation and say, at 30%, at 40%, and at 50%, how does the balance sheets look like?
Pretty much. But there's something that you mentioned last year. I'm going to come back to that. You said that, well, let's not assume it's just 14%. Let's not assume it's 17%. I'm going to come back to that and ask you whether you still maintain the same sentiment that you gave me last year, saying, well, these are the numbers that we have, but in reality, there could be more. All right, Abraham. I mean, it's saying everything is fine. But before you stand, do you share the same sentiment with Bodo that it's not rosy as he's trying to paint it?
You see, first and foremost, he's the governor of the Central Bank of Kenya.
Yes.
There is no way he can stand there and proclaim doom on yes. the sector that he regulates. I think that would be wrong. So he has to sit on the best side of this scenario.
Yes.
Now, we are here to analyze. So let's look at it as how bad it can get.
Yes.
We already admitted that at 14% is toxic. That one, there's no dispute. We've also agreed that 54% has been rescheduled. Remember, we've said you can recalibrate, but you don't change what you're recalibrating. Okay?
Yes.
So the fact that you have rescheduled has not changed the quality of what you're rescheduling.
Yes.
All you have done is you have kicked the can down the lane. You have delayed your pain. hoping that that pain will have gone away, but the next time it comes round.
Yes.
It's like we're actually snoozing an alarm. It comes, we snooze it. We come, we snooze it. It will reach a point we can't snooze it anymore. Now, so we are saying, in effect, the worst case scenario is 14 plus 54. That is the worst case scenario. That all these scheduled debts can go bad. That is what it is. That is what we are looking at. That is the worst it can become, using the statistics that have been admitted.
Yes, yes.
So if that is a reality, then it goes back to the issue of, he talked about provisioning. Yes, IFRS 9 has an element of pro forma provisioning. However, the models, with all banks use different models for the IFRS 9, because IFRS 9 just gives guidelines, but does not tell you that it is one method for. So every bank uses its own model of how they do their IFRS 9 in terms of how they do their pro forma provisioning. And of course, every person, because provisioning hits your bottom line, they'll try to be as conservative as possible in terms of putting little provisions.
Yes.
But I don't think there's any bank that would ride high when your provisioning starts hitting the 30, 40 mark. But by the time you get to 50, you probably may not be solvent. So then what do we do? I think we are staring at a very grim situation, and a situation whereby we can keep changing the goalposts, changing the ruler, increasing the what we measure, and changing what is bad and what is not good.
Yes.
But the underlying asset can only be cured if the economy gets back where it's supposed to. He's talking about three months. I agree with Bodo. 3 months is too short a horizon. This economy. Let's talk about the whole of 2021 as a time horizon of what we want to achieve.
Yes.
But in that 2021, how do we keep this sector afloat? Because all these things that have been floating in the air about the economic effects of this pandemic, all of them are crystallizing now in the banks.
Yes.
So you'll start seeing the real stress. I mean, that's what I'm saying. If this stress test, that's what I'm saying. For me, just one of the test tests I would do is, what would 14 plus 54% look like?
Pretty much.
Yeah, because you compare that, the 14 plus 54 of 3 trillion, which is 68% of 3 trillion. How would it compare to the total capital of all banks? How do those sit? And that's what we need to look at.
Yes.
And then break it down to individual banks. If that ratio is put to each bank vis-a-vis their capital, how many would survive? And those are the things that need to worry us. Then now comes the other things, the problem of liquidity. What is happening? Even banks now have joined the list of pending bills, because a loan when not paid is a pending bill.
Yes.
So even banks now are suffering the same problem. That's why there's liquidity, because they gave out money, it's not come back. And the money they had, the depositors are taking it out. So there's a crunch. You see, so banks are experiencing the same problem people were experiencing last year. That the money they gave out is not coming back. The money they had is being taken out. So the discount window is very critical. Yes, there's stigma. We can talk about stigma. We can talk about everything. But it's about time we said the government is bailing out banks. But how do we bail them out? Then now we can have that conversation.
Yes.
Because once we agree that there's a problem,
yes,
then we start the conversation of bailing. Because worldwide the bailouts are, and bailouts come in many ways. We're not saying that we give them free money. We're just saying them avail liquidity. And even if as a government the money is not there, there are lines.
Yes.
We just pull them because we need to save our sector. Because these statistics are not good. They are not good at all. And we are not out of the woods. As you can see, the corona, we are still in it. So what it will do to us economically is still an unknown. So what we need to do is to have measures that are sustainable to keep. This rescheduling is good for you and I, that your debt, you've been able to push your can another 6 months.
Yes.
But for the bank, it's very, very painful for them, because they have everybody doing the same thing, doing those letters. So this is what I'm telling you, as Bodo has just put it, this stress, how far can we push?
Yes.
So it's very important that we very quickly start the conversation of how do we bail out our institutions.
Pretty much. All right, Bodo, in just 2 minutes, so we cross over to the next part of the conversation this morning. That is the question, Bodo. I mean, the banks are saying, well, despite what you're saying, you as our governor, that we look stable, you have to look for ways of cushioning us right now. You and the Treasury have to start that conversation. But what sort of regulatory response do we expect to see from the regulator and Treasury as regards to that?
Well, I really do expect one is of course, I think central bank will be cognizant of the needs. Those suggestions for liquidity support, I think they'll be on standby, ready to assist anybody who is distressed. And I think I see that happening. There was already an element of that last year. And also, I think that from a regulatory perspective, they have to look at the liquidity position of banks, right? And I think this is a wake-up call for me in how you actually do what I call a liquidity measurement. They have to change how they measure liquidity. How they measure liquidity today is not very exhaustive. So that should be a response, and they need to take opportunity of this window and adjust it. And the other side is the response, which is already, this is something they've done, is to ease the capital, the treatment of capital, the treatment of those impairment adjustments on capital.
Yes.
You remember that when the IFRS 9, which is basically transitioned impairment adjustments from incurred loss model to expected credit loss model, the central bank came and said, well, because of that adoption on day one, there were some significant impairment adjustments that had to be passed through the balance sheets, and the central bank gave them an amortization schedule for doing that. I expect that the central bank would probably tell them, okay, look, for any increased impairment recognitions from this pandemic, don't charge your capital from a prudential perspective, because remember, central bank is a prudential regulator. It's to apply prudence, right? So that's also support that I expect to come through. But from an accounting perspective, I expect banks to charge the capital straight, and I think for some of the tier 2 and tier 3 banks, they would have to do some capital raising next year.
Yes, pretty much. George Bodo, Abraham Muthogo, thank you very much for joining us this morning to talk about exactly how the banking industry really has been faring on in the coronavirus pandemic and to put the MPC setting into proper perspective. All right, let's jump into the last issue that we have for you this morning, and this is where I'm going to introduce Boniface Gachoka, Secretary General, Bar Hotels and Liquor Trade Association. Now, the Alcohol Beverage Association of Kenya, ABAK, has urged the National Assembly to reject a bill proposing to limit packaging of alcoholic products in containers of 750 milliliters or more. Now, the association has said in a statement that the bill will increase the consumption of illicit and unhealthy alcoholic beverages. Let's leave it there. Now, the bill, sponsored by Mundanyi Member of Parliament, Dansona Makwana, is seeking to amend the Alcohol Bills Contract Act of 2010, to raise the minimum amount of packaged alcoholic drinks from the current 250 milliliters to 750 milliliters. All right, Mr. Gachoka, let me bring you in. You're saying the same thing that the bill seeks to remove is going to be counterproductive. How true is that?
First of all, is to bring this matter of 2010 amendment issue and state the following, that there is no scientific backing or even statistics or even a research that has been conducted. On my side, and for the people whom I represent, we feel this is using a hammer to kill an insect, because the whole industry is here. We are easily approachable. Every time when an amendment wants to be done, we are consulted, we participate in those processes, we discuss them. But we are not yet out of the woods of COVID. I've even enjoyed to hear how the banking sector is going on negatively.
Yes.
Now, when you look at our side, the alcohol industry, that that we were ordered to close, and we are counting. I represent 54,000 bars in the country, and we are at a risk of closure of almost 50%. So when we start talking about increasing another cost of investment, in this case, number one, for the bar owners, they'll have to restock or to increase the cost of purchase. Because if you can afford 250, now you'll have to pay more for you to afford a 750. For the manufacturers, they'll have to do, let's say the transporters, they'll have to do amendments of their vehicles, because those vehicles have been manufactured in a way that they can only be able to carry 250 mLs and 500 mLs. So they'll have to restructure. That cost is coming to almost 3.14 billion for the transporters only. On the side of the manufacturers, they'll have to restructure how they're going to package. First of all, they'll have to how they're going to they'll have to restructure the crates. They'll have to restructure the bottles. They'll have to restructure the content. When you go directly to our customers, if you increase the cost of consumption of a piece of alcohol, a 250 ml on an estimate can go for 150.
Yes.
The bodas and the mamambogas and the hustlers can easily be able to afford these. We do not sell alcohol to underage. We sell to people who are responsible. And we even promote that through our CSR programs. But now when you sell the same 750 to this other person, first of all, there's a risk that these people are going to move out and look for cheap liquor. That is going to encourage illicit, that is going to encourage counterfeits, that is going to encourage illegal imports. Because when you look at our peers in the EAC, they easily sell at 150. So that is going to bring unfair competition to us. And we are seeing all that proliferation of those illegal products from Tanzania and Uganda, and even Somalia. We are seeing a lot of cheap liquor that are going to get in. So when we do it 750, you can imagine. Beside that, we are going, during COVID, the legally registered alcohol joint was closed. And that led to a lot of illicit getting into this country. And this is the time when in fact, the association is ready, in partnership with ABAK and all the members, to start fighting illicit. When we are putting resources to fight what is wrong, that is when somebody is increasing the packaging and the cost of the legal liquor. So that will greatly harm this economy. Besides, billions of money are going to be lost. We did a research on the impact of this proposal on the side of the bars. Right now we are talking about stock loans. If the association does not do something urgently by the end of February, we will lose 7,000 bars. If the county government will continue asking for liquor licenses and these licenses, the last day of payment is 31st of March. If we do not sit down and negotiate for something, we will lose 20,000 bars. On that edge of a cliff, then we have another person who's going to increase the cost of investment in this alcohol industry. That is going to severely affect this industry. In fact, we are counting on the introduction of this bill, because even that threat of the industry, these people have lived in the cold of COVID-19 and the negative effects. On the threat of that industry, we're going to lose 3,000 bars. Just before even we get into the nitty-gritties. So we are calling on Honorable Danson. We have a very good platform in the alcoholic industry. We are very organized people. And that is why we don't fight with the government. We engage through a conversation. We even have a business situation room that is made of ABAK, that is made of the National Bar Owners Association, that is made of a representative of the distributors and the government. And actually the major sectors of the government, including the cadres and the others. Let him come, we sit down and discuss. We look at the objective. What was the intended purpose? What does he want to achieve? We will help him more, because we are the people who have the data. We are the people who have everything, every research that is needed. We are the people who have them. Let me add something about the bill. He's also talked about packaging and waste disposal. In Kenya, we have enough laws on management of wastes. We have enough laws. On estimate, the waste companies, the people who collect waste from us, that is recycling, they have a capital turnover of 400 million. These are figures that we have them, because we are a very organized industry. In total, they do a turnover of 400 million. If the bill comes the way it is coming, and if it is approved, we're expecting that to reduce to 15%. I mean, that is serious. We are not yet out of the wood. We have good partners who collect for all, who does waste management or who does recycling for all our products. And we have no crisis or any problem in terms of recycling of alcoholic products, because the bigger boys who does recycling in this country, they are known. They collect properly, they recycle, and this is going to force the manufacturers of alcohol. If the cost of glass will be that expensive from the introduction of a bill, it will force us to go to plastic, which to us, we feel now it is the reintroduction of the plastic menace. So we are calling on our members of parliament, we are calling on Honorable Danson, we're actually praying God to have a meeting with him next week. We sit down and talk. Let's look at his objective, let's analyze his intention. We are going to help him to achieve what he wants more. But let's not kill a whole industry or destabilize a whole alcoholic industry that is on its knees. Actually, right now, we're operating at a capacity of 37%. That means we had an employment base of 250,000 employees. Right now, we are doing 70%. So bringing another regulation, which we may call over-regulating the industry, will actually cripple this industry.
Pretty much. Boniface Gachoka, Secretary General, Bar Hotels and Liquor Traders Association, thank you very much for taking your few minutes this morning to speak to Metropole Television on that contagious bill that is waiting approval in the House.
Thank you so much.
On that note, we come to the end of Metropole's Business AM this week's edition. I'll see you next week, Monday, for another edition. Good weekend.